Hello everyone, welcome back to my channel. Subscribe to the channel for tech stocks updates. Nvidia has become synonymous with the artificial intelligence revolution. The company designs and manufactures graphics processing units crucial for AI applications. Its stock price reflects this dominance, soaring to unprecedented heights in recent years. Investors have recognized Nvidia's pivotal role in powering the future of computing. The demand for Nvidia's products, particularly its high-end GPUs, has surged. This is driven by the growing adoption of AI across industries. Data centers, hungry for processing power, are increasingly reliant on Nvidia's technology. This demand has fueled the company's impressive stock performance. However, recent weeks have witnessed a slight pullback in Nvidia's stock price. This fluctuation has sparked debate among analysts. Some attribute it to profit-taking after a period of significant gains. Others point to broader market concerns, particularly the impact of rising interest rates and inflation. This essay will delve into the factors influencing Nvidia's stock price. It will examine the interplay between the company's strengths in the AI market and the prevailing macroeconomic environment. Furthermore, it will analyze Nvidia's long-term prospects and the significance of upcoming earnings reports. Nvidia's recent stock performance cannot be viewed in isolation. The broader macroeconomic environment plays a significant role. Rising inflation has created uncertainty in the global economy. Central banks are raising interest rates to combat inflation. This cools economic growth and makes borrowing more expensive. Investors are shifting from growth stocks like Nvidia to defensive sectors. The war in Ukraine has exacerbated these challenges. The conflict has disrupted global supply chains. This adds to inflationary pressures and geopolitical uncertainty. Nvidia's stock pullback is part of a broader market correction. This highlights the influence of external factors on Nvidia's stock price. Despite market volatility, Nvidia remains a dominant force in AI. Nvidia's GPUs are the gold standard for AI applications. Years of R&D have created a significant technological advantage. Its CUDA platform is the industry standard for AI developers. This ecosystem lock-in makes it hard for competitors to dislodge Nvidia. Nvidia continues to innovate with new generations of GPUs. Nvidia's dominance extends beyond hardware. Strategic acquisitions and partnerships strengthen its offerings. Vertical integration provides end-to-end solutions for AI developers. Nvidia's fundamental strengths in the AI market remain intact. Its technological leadership and strategic partnerships position it well for continued growth. While Nvidia boasts a strong position in the AI market, its stock performance remains sensitive to broader market trends. The recent pullback in technology stocks, driven by macroeconomic concerns, exemplifies this interdependence. Investors often perceive high-growth companies like Nvidia as riskier during periods of economic uncertainty. When inflation rises and interest rates increase, investors tend to favor more stable, value-oriented sectors. This rotation out of growth stocks can create downward pressure on Nvidia's share price, even if the company's underlying fundamentals remain strong. Moreover, a potential economic slowdown could impact demand for Nvidia's products. If businesses cut back on spending in anticipation of slower growth, demand for data center upgrades and AI investments might soften. This could impact Nvidia's revenue and earnings, potentially affecting its stock performance. Therefore, while Nvidia's long-term prospects remain positive, investors need to be cognizant of the potential impact of macroeconomic headwinds on its near-term trajectory. Navigating the future: Nvidia's long-term outlook. Despite market volatility, Nvidia's long-term outlook remains positive. AI adoption is accelerating across industries, transforming businesses. Demand for data centers is expected to grow, benefiting Nvidia. The metaverse will further fuel demand for Nvidia's GPUs. Nvidia's R&D and strategic acquisitions position it well for future trends. Competition in the AI chip market is heating up. Nvidia must stay vigilant and not become complacent. The November earnings horizon. A glimpse into Nvidia's performance. Nvidia's upcoming earnings report in November will be a crucial event for investors. The report will provide insights into the company's recent performance and offer guidance for the future. Analysts and investors will be closely watching for signs of how macroeconomic factors are impacting demand for Nvidia's products. Key metrics to watch include revenue growth, particularly in the data center segment, which has been a major driver of Nvidia's recent success. Profitability margins will also be under scrutiny, as rising costs for raw materials and logistics could impact earnings. Furthermore, investors will be eager to hear Nvidia's outlook for the remainder of the year and beyond. Any indication of softening demand due to macroeconomic headwinds or increased competition could lead to volatility in Nvidia's stock price. Conversely, strong earnings beat and an optimistic outlook could provide a much-needed boost to investor confidence. The November earnings report will be a key moment for Nvidia to demonstrate its resilience and ability to navigate the current economic climate. Macro factors, the overarching influence on Nvidia's stock. While Nvidia's technological prowess and market leadership are undeniable, macroeconomic factors continue to exert a significant influence on its stock performance. The current environment of high inflation, rising interest rates, and geopolitical uncertainty has led to increased market volatility and a shift in investor sentiment. As a result, even companies with strong fundamentals like Nvidia have experienced pullbacks in their stock prices. This highlights the importance for investors of adopting a holistic perspective when evaluating Nvidia's investment case. Focusing solely on the company's internal strengths without considering the broader economic context can lead to incomplete and potentially misleading conclusions. Therefore, investors need to closely monitor macroeconomic developments and their potential impact on Nvidia's target markets. Factors such as inflation, interest rates, economic growth projections, and geopolitical events can all influence investor sentiment and consequently, Nvidia's stock price. Investor sentiment, a key driver of Nvidia's stock movements. It's crucial to recognize that stock prices, including Nvidia's, are not solely driven by objective financial data. Investor sentiment, often influenced by emotional responses to news and market trends, plays a significant role in shaping stock valuations. Positive news flow, such as successful product launches or partnerships, can fuel optimistic sentiment, leading to increased demand for Nvidia's stock. Conversely, negative news flow, like concerns about slowing economic growth or increased competition, can trigger fear and uncertainty, prompting investors to sell off their holdings. This interplay between rational analysis and emotional responses creates the inherent volatility observed in stock markets. For Nvidia, maintaining positive investor sentiment is paramount. The company needs to effectively communicate its growth story, highlighting its technological advantages, market opportunities, and strategies for navigating macroeconomic challenges. Transparency, proactive communication, and a clear vision for the future can go a long way in bolstering investor confidence and supporting Nvidia's stock price. Risk factors. What could derail Nvidia's momentum? While Nvidia enjoys a strong market position, several risk factors could derail its momentum. Macroeconomic headwinds pose a significant threat. High inflation, rising interest rates, and slowing growth could impact demand. Competition in the AI chip market is intensifying. Intel, AMD, Google, and Amazon are investing heavily in AI processors. Supply chain disruptions remain a concern. The global chip shortage could impact Nvidia's ability to meet demand. Nvidia's stock trades at a significant premium, reflecting high growth expectations. Conclusion: Nvidia's future, a balancing act. Nvidia stands as a technological leader, poised to capitalize on the transformative potential of AI. Its innovative products, strong market position, and robust financials provide a solid foundation for continued growth. However, the company operates in a dynamic environment influenced by both company-specific and macroeconomic factors. The recent pullback in Nvidia's stock price underscores the importance of considering the broader economic context when evaluating its investment case. While Nvidia's long-term prospects remain bright, its near-term performance will likely be influenced by factors such as inflation, interest rates, and economic growth. Investors need to maintain a balanced perspective, acknowledging both the opportunities and risks associated with investing in Nvidia. By closely monitoring the company's performance, tracking macroeconomic developments, and understanding the interplay between these factors, investors can make more informed decisions about their Nvidia holdings. Ultimately, Nvidia's future success will depend on its ability to continue innovating, navigating challenges, and delivering value to its shareholders in an evolving technological and economic landscape.